Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for August 5th, 2018. Hope you guys are having a great weekend. And we are in the middle of the summer doldrums. So I'm going to try to make this particular video and future videos a little shorter. I've realized that over time it seems like I've got more and more to say and I should really be toning it down a little bit. So now before I get started into what we're going to look for next week and kind of what has happened this last week, I wanted to make sure that I mentioned if you haven't signed up for ForexAnalytix, do so today. All you have to do is click the sign up button that's right over here, and then make sure you download our mobile apps. Whether and you can do a tablet too, whether you're on the App Store or Google Play Store. Make sure you have all of our analysis right at your fingertips, and because all those notifications are great when you're out on the road and you're traveling about, especially those of you that are in Europe or in the United States or anywhere else that happen to be on vacation right now. And you know, my colleagues in Europe have been on holiday this last week, so I know the summer months, especially when you drag into August, things get particularly slow, and we have to expect that this entire month. There is a lot of news surrounding trade, which is keeping things relatively interesting. At least little short bursts of volatility are happening as you know, headlines hit the wires, and especially, you know, an ongoing negotiations regarding the NAFTA negotiations that are happening right now. Those are spurring some movements in the markets during North American trade, but we're actually seeing a lot of activity in Asia as of late. So in my opinion, you just have to be a little bit more careful with the markets right now, and just realize that volatility is pretty subdued, but that doesn't mean it can't pick up, and just be careful. That's the point I'm trying to get across here. Now, there are a lot of mixed signals. You look across the board here on our currency pairs. I mean, we have a lot of mixed signals. We can see how neutral the crude oil is, and by the way, crude's just sitting, you know, right off of really key support at you know, $66, $67 a barrel. But a lot of mixed signals. But at the same time, we're starting to see a little bit of dollar strength eke into the market, and I'm going to take you over to the euro dollar first and foremost. And the euro dollar broke out of a triangle. Now, this is the weekly chart. The daily chart, you can see the push out of the triangle. Minimum expectation here is drop below 114, but if this is a pennant, you could see a much deeper correction in the euro dollar. And also keep in mind there's huge gaps down here. I know Joe Perry, he was on Bloomberg, one of our team members. He was on Bloomberg on Friday, and he pointed you know, this big gap here in the euro dollar. I'm not sure if we're going to make it all the way down there, but you know, as the trade war looms and continues to, you know, heat up, the dollar may continue to strengthen as a result. So the euro dollar does look weak. I have to also point out that the DSI, or daily sentiment index, of the dollar index right now is at 90. I think that it came in on Friday at 90, which is extreme bullish sentiment. Now, when sentiment is that extreme, you got to start to be a little careful. So I think what I would be expecting, at least initially, is maybe a reaction somewhere down here towards support around the 115 level, and seeing, you know, we're probably not going to get a full-on breakdown of the euro dollar, at least not right now. We should see some continued weakness in the euro, but a full-fledged breakdown in the euro dollar, or a breakout in the US dollar with sentiment so bullish right now, it's going to be tough to do. Not saying it's impossible, it's just going to be a little bit more difficult to do. Let's take a look at the cable. The cable, this is an interesting pair, and I got to point out that it really did not meet my expectations when we came out of this. You can see this descending wedge here. When we came out of this descending wedge, we only, and you can't see it because I don't have the fib up here, not this week, I had it up here for the last several weeks, but we only challenged a 24% retracement, and minimum expectations for me coming out of a descending wedge usually is a 38% retracement. We couldn't even do that. It was really shallow, and because of that, here we are challenging 130. The Bank of England, Mark Carney, this last week, when they raised rates, didn't help the argument at all that the pound should be stronger, because he's looking at one hike a year, and I think that really kind of the market took a little bit of a dovish slant with his commentary. So the pound is falling towards this 618 retracement that comes in around 128.50. If the euro challenges 115, I think 128.50 is a very viable option for the cable. Let's take a look at the Aussie. The Aussie is very range bound. Now this week we do have the RBA and the RBNZ, which I'll talk about here in a few minutes. But just I wanted to point out here that we are still very much range bound with the Aussie, and we're ranging between this 74.80 and 73 and a quarter level, and we're just kind of range bound. So we can very easily test the upper or lower end of those ranges following the RBA this next week. Let's take a look at the Kiwi. The Kiwi, it actually closed on a fairly weak note, and the Kiwi is, also range bound as well, and that's between 67 cents and 68.50. But the one point I want to make with the Kiwi is we're below this multi-year broken trend line. Now, we've been below it and we've kind of been toying with it, but the fact of the matter is if we break through 67 cents, the Kiwi may come under some pressure. Now, the RBNZ and the RBA are both meeting this week. We're not expecting anything spectacular to come out of either one. However, if something is said by the RBNZ governor, or that could lead us to an idea that they might be a little bit more dovish, maybe because of trade war tensions, or how China's consumption might impact New Zealand exports, it could weaken. But I don't know if the Kiwi dollar is the Kiwi US dollar, the New Zealand dollar that you're looking at here, is the right play, which I'm going to talk about another pair here in just a few minutes. A couple other pairs I wanted to mention, just because I personally have been taking some counter trend positions in them, are the US dollar Canadian and the US dollar Mexican peso. And I know if you follow the FACE webinars, you know exactly what my thoughts here. But if you are looking at like the Canadian, the dollar Canadian, and by the way, we do have Canadian employment on Friday, this upcoming Friday, but you'll notice that we're about ready to challenge the 50% retracement. Well, there's a couple fib confluences here. The 50% retracement, also the previous broken trend line. You can see how we're coming right into that trend line here, and we have the 50% retracement of this move here, and also the 38% retracement of this move. Big confluence comes in at 129.50, and 129.50 is that trend line. So I do believe that we're going to test it, and when we get there, I think that's going to be a good place to establish counter trend longs. I've already started nibbling on the long side, but not very aggressively, obviously, because it is counter trend. Keeping in mind that these ongoing NAFTA negotiations may move the needle as well, and especially with the peso. Let's take a look at the peso. Now, the peso has dropped quite aggressively, and you guys can see very similar situation to Canada. We have this broken trend line following this big Gartley pattern that we had, and frankly, our team here at ForexAnalytix have traded the US dollar Mexican peso very well over the last several years, and the patterns in play that we have issued regarding the peso have just been spectacular, and I'm talking about our entire team. And one of the things that I've noticed here is that we are challenging this 161% extension, okay, trendline support, 78% retracement, big confluence basically at 1850. Now, with the NAFTA negotiations, a lot of the talking points have been, ironed out. The big one is the sunset clause, and I can't imagine that the U.S. I have to imagine that they're going to eventually be a little bit more lenient on a 5-year sunset clause, and they're going to try to make it maybe 10-year or something like that. But I understand Canada and Mexico's arguments that how can you possibly, companies possibly establish new factories, try to build out forecasts for only 5 years. It doesn't make much sense. So the U.S. may bend at some point, but that's like the biggest sticking point. And if they can't get over that sunset clause here in the coming weeks, we could very easily see a bounce back in the U.S. dollar Mexican peso, maybe as NAFTA negotiations get prolonged, or maybe even to some extent fall apart. Remember, we do have an incoming administration in Mexico. They want to get NAFTA done ahead of AMLO taking office, but that doesn't mean it's going to. And he is also a wild card, kind of like President Trump here in the United States, where he could very easily shift his rhetoric on a dime. So that's something to also keep in mind. Now, the U.S. dollar Mexican peso, really to turn bullish, has to get above 1870. It's 1875, 1876, or basically 1880, and that would clear some upside towards the 200-day moving average if broken towards the 19 peso level. Now, a couple other things. Dollar yen. You guys, I don't know if you're trading the dollar yen. I'm not. I told our traders at the end of this week, I really can't make sense of the dollar yen and how it's trading. It's being pulled in several different directions, whether it's trade tensions, the yuan, the move in bonds, risk appetite. There's a lot of different forces that are pulling the dollar yen around, but I know we are approaching this pretty big support zone that comes in around 110.50, and I think that needs to be watched for bulls and bears. And obviously, if you're bearish, a break below 110.50 would be a bearish event, because then it would prove that this was all a false breakout the last months of activity. But also, if we can hold it, the dollar yen may start to strengthen. It's just not moving. It's not giving me any clear direction. Not saying that it isn't for some people, and I think a lot of traders out there have clarity with the dollar yen. I just don't. So, and it's okay. It's all right not to see it clearly, and if you don't, then don't trade it. And that's kind of what I'm doing at this moment in time. One of the other currency pairs that I wanted to talk about is the Aussie New Zealand. Now, the Aussie New Zealand, and let me extend this out just a little bit. The Aussie New Zealand on a weekly basis is in a really big triangle, but we have a couple big events this week with the RBA on Monday night, well, Tuesday morning, and then the RBNZ, which is Wednesday night or Thursday morning if you're in New Zealand. And we have inflation expectations out of New Zealand Tuesday night, Wednesday morning. In Australia, the RBA Governor Lowe speaks. You've got like I said, the RBNZ that's meeting on Wednesday night, and then on Thursday you have the RBA monetary policy statement. So a lot of potential movements here with these two particular currencies. And if you look at the Aussie New Zealand, we are smack dab in the middle of this big weekly triangle consolidation. We had this false breakout here that led to the move lower, which was really, well, I actually was on the long side, had to turn around and get out of my longs because of that. But it was a really good signal that we were going to get a sell-off, and that's what we did. And we came right down to triangle support. It was a great play back up to the upside. And we have some room to get back to the upper end of this triangle, which is 112. Well, if you look closer at the daily chart, you'll notice, and I don't have it drawn out here because it wasn't perfectly drawn out, but we have, you could call it a flag pattern. But the fact of the matter is 110 is resistance, and it's a big figure. There's got to be a lot of stops on shorts that are above the 110 level. And my thought process is if we can get above 110, and then there's a reason to get above 110, whether it's a more bullish or more hawkish, excuse me, RBA, and maybe a more dovish RBNZ by the mid to end of next week, that could put the Aussie New Zealand above 110, and then trip the stops above there and possibly take us towards 111, 111.50, towards the triangle highs of the weekly chart. So I think there's some opportunity in the Aussie New Zealand. The 200-day moving average is you can see right through this whole entire month, or this last month, has given us a lot of support. So you know what the downside risk is here, but also on a break above 110, I think the momentum will start to carry us higher. One last thing before I let you go, and I know I was trying to keep this video short, and I just looked at the time, and it's still a little longer than I wanted. I wanted to point out some of the cryptocurrencies like Ethereum, Bitcoin. I don't even take a look at Litecoin, but look at these charts. And you have to remember, I know I've told our daily listeners of the FACE webinar that I got a phone call as I was getting on a plane going to New York City to go to our Christmas party or holiday party in New York. I was boarding the plane, and I got a call from a family member that asked if it was a good time to buy cryptocurrencies, and I knew at that point in time, I'm like, don't. Well, first of all, I said don't do it, and then second of all, I knew at that point it's like, okay, it hit the masses when I have a mother of two, asking about buying cryptocurrencies, who never ever invested in the markets. And it's not that she's a mother, it's just that she's never invested in the markets. But I'm just pointing out that it was hitting the masses at that point, and we've really slumped since then. Now, the thing that Bitcoin, you can see, is actually outperforming some of these other cryptocurrencies. But there's been a lot of investment into cryptocurrencies by investment banks, the institutional community, over the last year and a half, 2 years. There's been a lot of institutional money put in behind these cryptocurrencies, and I don't know to what extent, but what I do know is that technically they look pretty sick. If you look at Litecoin, Ethereum, and Bitcoin, they're not looking good, and I guess the worry is here, not just for cryptocurrency, early adopters or people that trade them on the long side, or only on the long side, or holding them, but also institutional money that could a breakdown in cryptocurrencies really start a ripple in the rest of the financial markets? I don't think there's that much adoption at this point in time to do so, but I think it is something that could be concerning if we start to see a really big liquidation of these cryptocurrencies. And I think that we're walking a very fine line right now between a correction turning into something extremely bearish. So for the entire crypto market. So I just wanted to bring that up because it is something that I had been thinking about recently, especially with the cryptocurrencies on such key technical support levels, and so it's just something new to think about. All right, guys and gals, listen, if you found this video helpful, useful for you for next week, gave you some ideas, please hit the like button, also subscribe, and make sure you share this video around, especially if I tweet it out or our team tweets it out. Share it with other traders in the community so they can benefit from the markets. There's so much in the currency market. It's the biggest market in the world. There's a lot to share, a lot to go around. So help share our ideas and support what we're doing. Guys and gals, my name is Blake Morrow. I'm with ForexAnalytix. I hope you have a great remainder of your weekend and a great trading week next week. Don't forget to listen into our daily FACE webinars every single morning at 8 a.m. Eastern. Thanks for tuning in. Bye-bye.